Right. Morning traders. Welcome to Morning Kappa. Aiman here. So happy Friday. All right. Looking at the S&P 500, the index continued to slip lower as a result from the follow-through momentum from the previous session. So the index now are eyeing uh, for the 6,300 support level. So we believe that the market sentiment are looking positive now. Recent market are just experiencing a technical rebound from the recent economic event. So on the other note, if you are aware that the two Max 7 stock pop up yesterday on better than expected reported earnings. So looking at the charts again, do note that on the current correction, the support tends to be strong. Well, if any rebound will occur, do watch out closely at the 6,300 level. Right, looking at the Hang Seng Index, HSIF, so the index continue to experience a persistent selling pressure to close at 24746 points, together with the crossing below the 20-day moving average. So we expect a rebound at a range of to 400 level, if not lower at 23 800 points level. Well, sentiment seems negative in yesterday's session after the China economic data of PMI shows a slowdown, coupled with declining of factory output. Right. So for now, we remain our positive trading bias for Hang Seng Index futures unless it breach below the 23,000 level, which is also our stop loss. So again, if there's any chance for rebound, do watch out for 24,400 level and also 23,800 level. So looking at the WTI crude price futures, so it has retraced slightly to close at 6.926 US dollar after reach 70 US dollar on the previous session. So for the oil market, as there's still no further clarity by Trump for its tariff, coupled with the um, uh, tariff threatening on Russia. So this has created a market uncertain for the price to hover. Also, recently, U.S. Crude oil inventory rose due to the weaker demand, has kept the price at where it is right now. So at this juncture, we still see that the oil to hold at the range of 70 US dollar level. Uh, with any further pressure, could drag it to a minor support of 67, 68 kind of range. 67 to 68 US dollar level. Right, so back home, looking at our FKLI here. So that it was lower on yesterday's session, but didn't seem to make a significant move as of yesterday. It closed at 1518 points. So we believe the sentiment for now remains fragile surrounding the tariff deadline today, whether tariff to be lowered or remains the same at 25% for Malaysia. So uh, as you may all know, right, that Anwar and Trump had a call recently. um, So in terms of sector performance, tech recorded gains as much as 2.18% yesterday, following the 13MP announcement regarding the big plans on the tech innovation. Also, and if you look at our watch list, we have a lot of tech names that are worth looking at. We have Penta, NextG, DG, SNS. Also, to write on the tech hype for today, we have CPE for our Malaysia stock pick. So for CPE, the stock has experienced a bullish breakout above 94 cent, supported by the strong trading volume. So we expect the momentum to strengthen and the stock able to climb further to test the next resistance at 1 ringgit, followed by 1 ringgit and 5 cent. So if it happened to break out below the 90 cent level and form a new low, a new lower low, so this could tells us that a near-term pullback is coming. Right. Also, next we have Coraza Integrated Technology. So the stock yesterday has breached above the resistance of 51 cent on strong trading volume. Just like what I highlighted on yesterday's morning kappa. So should the momentum to hold and continue to trend higher in the coming session, um, the counter or the stocks are potentially testing the next resistance at 55 cent, followed by 58 cent level. So if it drops below 48 cent level, this would open the door for a further correction phase. Right. So also for Coraza, if you look here at the latest report from our analysts, we still have a buy recommendation on Coraza with TP stood at 67 cent. So looking at the FCPO, the commodity fell lower on yesterday's session to close slightly above the 4,200 resistance level. So as long as it doesn't breach lower, we still think that this is a healthy pullback within this uptrend line. Right. So I believe sentiment now look still on the positive side. However, I think yesterday pullback was just I think traders assessing the China weaker economic data, as China also are one of the key buyers, right? So look at the technical chart, we still hold our positive view on the FCPO unless it crosses below the 4,100 level. And now that it is in a pullback trend, support now tend to be strong. So if the commodity to revisit the 4,200 level, we may see a rebound potentially at this level. Right. So I think that's all from me. I'll stop here and pass the floor to Adam. Right. Happy trading, sir. Trading, everyone.
Okay, good morning, everyone. So today we have a construction sector update following the tabling of the 13th Malaysian Plan yesterday in Parliament. So the government has targeted a development expenditure of 430 billion ringgit for the period between 2026 to 2030. And this DE figure of 430 billion is higher than what has been targeted for the 12th MP, which was at 415 billion ringgit. So we view that a higher DE should facilitate infrastructure growth in the country and hence provide opportunities for contractors. And in terms of what projects were being mentioned under the 13th MP, there was nothing that was really new. I mean, most of it was just a mention of the Sabah Sarawak Link Road, Central Spine Road, the widening of the Plus Highway, LRT3 and Penang LRT, which, is already known by the market. But nevertheless, there was, a notable mention of the projects for the public-private partnership or PPP, which the government expects the private sector to fund about 61 billion ringgit during the period of the 13th MP. And just to recap, key projects under the Public-Private Partnership Master Plan 2030 includes your West Ipoh Span Expressway, Putrajaya Bangi Expressway, Ipoh Central, and also Lebuh Raya Pantai Timur 3. And also, there was a strong emphasis on flood mitigation projects, of which the government targets to complete 55 flood mitigation projects in 2030 from just 17 in 2024. And this is actually a continuation whereby the government will continue with 43 high priority flood mitigation projects worth 12 billion ringgit, which started off in 2024. So investable names in the flood mitigation space in Malaysia include MRCB, Gamuda, and also Varia. Last but not least, the multi-tiered foreign worker levy mechanism is to be implemented in 2026. While no details were disclosed, we based our hypothetical earnings impact on multi-tiered levy rates proposed for 2021, and we saw that earnings of contractors like Suncon are only to be reduced by only less than 1%. So that is the key takeaways for the 13 Malaysian Plan in regard to the construction sector. So that's all from me. I will pass on the floor to the next speaker. Thank you.
Thanks, Adam. Hi, everyone. Morning. From my end, I have a bank sector update note. This is to discuss the June 2025 banking system statistics from the BNM that was released yesterday. So overall, system loans growth was up 5.1% year-on-year. This is a deceleration from the 6.4% print that was recorded in June of last year. On a year-to-date annualized basis, loan growth was up by a more modest 4.3%, which for now is short of our 4.5% to 5% forecast for the year. We keep that forecast unchanged for now, as we expect some boost to loan growth from July's OPR cut. Household loans continued to outpace businesses. Household loans was up 6% year-on-year compared to business loans 4%. And among the business sectors, we saw strong momentum from the finance and transport and communication sectors. In terms of the lending indicators, these looked quite mixed. On the one hand, we had continued strong loan applications and approvals, which were up 7% and 6% year-on-year respectively for the first half of 2025. Similar to the previous month's trends, loan applications and approvals for businesses were stronger than that for households, largely driven by sectors such as construction and, again, transport and comms. But on the other hand, loan disbursements, especially to businesses, were down year-on-year. We suspect this could be due to the businesses adopting a wait-and-see approach, particularly with respect to the ongoing trade uncertainty. On deposits, these were up by 3% year-on-year, undershooting loan growth pace during that period. The system loans to deposits ratio crept up to 89%, which is nearing all-time high levels, but we do think that system liquidity remains ample. In fact, the liquidity coverage ratio stands at a very healthy 161%. We note particularly strong growth in CASA deposits, with the CASA ratio expanding year-on-year and Q-on-Q to 31.6%. And we also note that the interest rate gap between the 6-month and 12-month fixed deposits narrowed to about 2 bips in June versus 5 bips in December. We think this reflects the bank's deposit gathering strategies in anticipation of an OPR cut, i.e. you try to prioritize the shorter tail deposits that will be repriced faster following the cut. On asset quality, this continues to improve. Absolute gross impaired loans were down 6% year-on-year, and the gross impaired loans ratio, or the GIL ratio, is now at about 1.4% versus 1.6% in the previous year. There were GIL ratio improvements for both the households and non-households as well. The non-household GIL ratio is actually now below the 2% mark, which looks to be an all-time low. And lastly, the loan loss coverage remains very healthy at just over 90%. And this compares to the mid 80% that the banking system averaged at pre-pandemic. So yeah, overall, we are still neutral on the banks. Again, the thesis remains the same. We don't think there are many major catalysts for the banks in sight. The recent OPR cut could put downside pressure on near-term earnings, but we think to a large extent this could be cushioned by the SRR cut that happened earlier in May. So our top picks are the same: Maybank for its yields and trading liquidity, Hong Leong Bank for defensiveness, and CIMB for valuations and also for yields. So I'll stop here and pass on to Vanessa. Thanks.
Thank you, Nabil. Good morning, everyone. Vanessa here. So I would like to share with you some of the, I would say, focused counters or focused warrants that is related to tariff. All right, so today will be the highly anticipated tariff rate will be announced very soon. So yesterday we have seen some of the counters, they are very active. So this is actually a snapshot from RHB World website. And these are, I actually sorted it according to the highest traded warrants. All right, so besides from Nidais Midmark, which is under the retail category, so we do see technology sectors like Penta, Netgate, and Greatech, as well as EG that is on this list. Okay, so yesterday, especially later in the afternoon, we see a surge in the volume trading on all these counters. All right, but however, it does not mean that when it's highly traded means that it's actually the best warrant. It applies to RHB warrant as well. So if you see Netgate CM, it's actually very deep in the money. Yesterday it was 155 cents. It's already 32% in the money. So is this going to be the most attractive Netgate for you, who's the bullish investor? So I will just share with you how do we can use the warrant website to search on Netgate. So in my mind, I'm actually quite bullish on Netgate, and then I can use the warrant metrics to compare them side by side. In this case, you will see Netgate CM and Netgate CQ. Netgate CM is highly in the money. That's why you will see very high absolute price that's here, that's stated in the warrant bid price. While Netgate CQ currently is still out the money, so you will see it relatively cheaper in terms of the warrant bid price. All right, so both of them, they are for CQ, there's actually less sensitive, 4 ticks only. So when it drops, there's more cushion. But if you are looking for fast in, fast out, and you have a very different strategy, you want to trade intraday, then you can actually look at CM with 2 ticks of sensitivity. All right, so besides from NationGate, for technology counters, yesterday, we say it, or we actually look forward to what is going to be anticipated. So for example, EGCF, EG Industry Warrant, is trading at 2 ticks and also an effective gearing of 3.7 times. All right, so how do you actually get effective gearing? So you just use very simple calculation from 8.5 cents to 9 cents. All right, so it's 1 tick, right? So 1% move in EG will actually cause about 3.7% move in EGCF. All right, so that's how we look at it. Besides from EG, that's also technology counters that actually benefits from the tariff if once it's actually been confirmed. So that's Me Technovation C29 and also SNS CF. So I cannot tell you what to put in your watch list, right? So for you who are actually bullish and also would like to have a look on all these counters, then you will be able to, help with your decision using the live price matrix. So if you are not, if you don't find anything interesting on RHB World website, feel free to actually use some other issuers website to actually help and aid with your investment. All right, so you don't actually invest into structured warrants or call warrants blindly, just following the traded volume. All right, so that's all I want to tell you all today. So thank you so much for dialing in. We'll see you on Monday, 8 a.m. RHB Morning Kappa at 8. Thank you.